Blowouts, a look at two stocks. Whether it's in the form of great earnings or positions getting blown off the books, Brian Bolan gives you the lowdown on what happened.
Welcome to another edition of Bolan's Blowouts. I'm Brian Bolan, and I'm here to take a look at a couple stocks. One that's going to have blowout earnings, and another one that's getting blown off the books. First one that I'm going to go to is going to be a stock that had blowout earnings, and that's SORL Auto Parts. Now, this is a name that is a little bit more aggressive. It's from China, and it is a auto parts retailer. So if we take a look here at the screen, we can see it is a Zacks rank #1 strong buy. It has a F for growth, which is something I don't necessarily like to see, but it is what it is in a blowout situation because they posted blowout earnings. If we take a look here, we can see that there was a 140% positive earnings surprise. And I'm on the detailed estimates page for SORL. The company also guided higher, and they are expecting $315 million in sales when the previous guidance was $300 million. And we can see now that earnings estimates have moved up since then. So we see 76 cents 60 days ago moving up to 94 cents. And next year, $1 for, expect this number to move up in the coming days. Now, this is a little bit of a play around the idea of the pollution in China and the government wanting more buses on the street, basically, less cars, more public transportation. So while this idea is hot right now, it could turn the other way around very quickly. I don't want to go ahead and use that pun about putting the brakes on this stock, but at some point, that just might happen. Obviously, at a $6 price and a pretty small market cap, this one could move around pretty big. The next name is really two names, and we're sticking in the auto industry here, and this is about the car rental business. Both Hertz and Avis recently reported, and they were big misses, and these stocks have really been hurt of late. So let's take a look at what has been going on with both of these names. We can see Hertz is now a stock under 10, if you will, with a 5% move lower today. Of course, it is a Zacks rank #5 strong sell, as pretty much all of our blowouts, the stocks are getting blown off the books. We'll see. So there was that gigantic miss recently, but also yesterday there was a very big put being placed on the market. So that gives an investor the right to sell a stock at a specific price. Now, my notes say that it was the July 12.5 put. So obviously that put is well out of the money right now, with the stock trading $9.38. And at the time, that stock was probably trading just a little bit over 10. So it was well out of the money. So someone has got the right to sell this stock much higher than the current price. So obviously, that is a money-making trade for that player. Now, if we take a look at another stock that is in the same business here, the auto rental, is Avis. CAR is the ticker, CAR. Another Zacks rank #5, and we can see a big dramatic move here in price from $30 down to about $20 now, $21 at the current price. So what's going on with both of these? We mentioned that in the last couple weeks, Hertz missed just the other week, Avis at the beginning of the month. These were much bigger than expected misses. The idea here is that a lot of people have been talking about how Uber has really changed the dynamic in the rental business. Number one, that the rental car companies aren't buying as many cars because they just don't have the customers. They're not having the reservations, because people are just using Uber because it's just that much easier to pick up an Uber at the airport, take you to your destination, where normally you would have a car. The Uber just makes more sense right now to a lot of people, especially in this day and age, especially on the price end. So these stocks are getting blown off the books of a lot of big investors. Well, that's it for this week. Join us again next week when we take a look at a couple more stocks that are seeing either blowout earnings or being blown off the books.